welcome to the Exporters for XM call. My name is Lorraine and I will be operator for today's call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session. Please note that this conference is being recorded. I will now turn the call over to Mr. Jared Favoli. Mr. Favoli, you may begin.
Thank you. Hi, good morning, everybody, and thank you for participating in this call. Obviously, we wanted to hold this call ahead of the Senate banking hearing today on XM and wanted to get, for the reporters and others on the phone, just to get a unique perspective from the private sector and private sector banks and how they work and complementary with XM and don't compete with XM. So this call will have about speakers will talk for about 15 minutes and then we'll turn it over to questions. Participating this morning is Georgette Sierra, Vice President of Government Relations for the Financial Services Roundtable. Tim McCarthy, Vice President of Global Trade Finance for TD Bank N.A. Bill Prout, Senior Vice President Commercial Banking at the Bank of Texas. And then T.J. Raguso, Executive Vice President International Division at Amegy Bank N.A., also based in Texas. So I'm going to turn the call over to Georgette.
Thank you, Jared. By way of background, the Financial Services Roundtable represents about 100 of the largest integrated financial services companies providing banking, insurance, payments, and investment products to consumers. Many of our members are active in trade finance, and they use it as an additional tool to meet the needs of their commercial clients. FSR and the Bankers Association for Finance and Trade, also known as BAFT, will be submitting a joint statement into the record of today's Senate Banking Committee hearing, and it will provide context and detail around several of the key points that will be highlighted on this morning's call. The financial services industry, as part of the broader business coalition, Exporters for XM, has been working to educate Congress on the crucial role of the Export-Import Bank as it relates to international trade and U.S. job growth, and also the vital partnership with the private lending community that enables our members to offer trade finance availability and affordability that cannot be replaced solely by the private sector. And the institutions on this call will discuss that in more detail. So now I'd like to turn it over to Tim McCarthy with TD Bank Group N.A.
Good morning. Thank you, Georgette. Let me start off by stating that TD Bank is a very active user of XM Bank programs, and we are an advocate for XM Bank's reauthorization. I personally coordinate TD Bank's use of XM's Working Capital Guarantee Program throughout the TD Bank footprint in the East Coast of the U.S. That extends from Maine down to Florida. The Working Capital Guarantee Program provides commercial lenders with a partial repayment guarantee on credit lines that the lender establishes specifically to support U.S. exports by small and medium-sized companies. These exporters are generally in the size range of $100 million to down to about $9 or $10 million in annual sales. We have an extensive book of these small and medium-sized exporters that absolutely rely upon credit availability to support their export assets. If that availability was not there, then they would be looking at a reduction in the amount of export sales that they could make and the number of employees that they could maintain. There have been a number of misstatements and catchphrases regarding the XM Bank reauthorization. One of those catchphrases is crony capitalism. The clients that I work with are absolutely small, medium-sized companies, and crony capitalism does not apply to them at all. Instead, these are companies generally privately owned or that are employing anywhere from 10 to 85 people. Export sales are a significant portion of their business line, and as I said previously, without the financing that's made available by commercial banks but supported by a partial guarantee from XM Bank, these companies would not be able to pursue their export business. Last comment is that in conversations with Capitol Hill staff. One of the staff members made a comment that EXIM really comes down to employment, and that's absolutely the case. It was founded back in the 30s to expand employment. It continues to do that through a very difficult economic period in the 2007, 2008, 2009. If EXIM was not available, there would be a significant reduction in exporter employment here in the U.S. That concludes my comments.
Thank you, Mr. Prout.
Bill?
Good morning. Bill Prout with Bank of Texas. Bank of Texas is part of BOK Financial, a regional bank, a $30 billion regional bank in the southwest United States. Our primary focus is supporting really small and middle market companies throughout the region. We are an active lender with EXIM Bank, also have delegated authority, and our focus is on the working capital guarantee program. Our customers also utilize the credit insurance programs. Both of these programs allow the bank and the customer to mitigate international risks that we would find unacceptable. These international risks are the risks related to collection of foreign receivables. As a lender, we're unwilling to take that risk without some type of mitigating factor, and EXIM Bank has been able to provide that in situations where we're able to make a loan to a good company with good credit, typically having greater exposure on the domestic side, so it's not 100% guaranteed relationship in any manner. All have been able to benefit from that over the years, which is shown in the performance, EXIM Bank's performance and history of profits and limited default rates, better in some cases than commercial banks in general. We are very selective how we utilize this program. EXIM's typically, it's not the cheapest, it's not the fastest, it's not the easiest route to take. If we can do it through traditional means, we would pursue that. However, this capacity and the belief in the soundbite that this capacity is available in the private sector, it's just not true. First off, all the domestic banks, our policies prevent us from lending against foreign accounts receivable except on an exception basis. And those exceptions may only get made in limited amounts into some of the largest companies. EXIM comes in and fills that gap, so we're able to partner with EXIM on that. In addition to our internal policies, our regulators would, to put it lightly, they'd frown upon that type of lending. And quite frankly, if you were doing an excessive amount of it, you would be at risk of being shut down or at least be under great scrutiny. So there are many factors that prevent the commercial banking sector from picking this up. The additional capacity that might develop, because there is potential money to be made, is what I hear from folks in Congress and staffers. They just don't have the capacity of the commercial banking sector, and the cost that they would, or the price that they would have to charge would be excessive compared to where it is today. So I'd just like to end on that note that this is something that we work in partnership to fill the gaps using EXIM Bank to support small business and medium-sized business jobs. And it's critically important here in Texas, which is the top exporting state in the country, and Houston being the top exporting region in the country. But it's also critical to some of these other states that our bank, BOKF, is involved with, that may or may not have the same level of expertise in those markets and the number of exporters in those markets. So some of those underserved markets, such as Oklahoma and Arkansas and potentially New Mexico. So I'll leave it at that and look forward to questions later.
Thank you. TJ?
Yes, my name is TJ Raguso, and I manage the international banking division of the Amegy Bank, and we are a commercial bank headquartered in Texas. We have about 40,000 commercial customers, and first and foremost, we use the EXIM Bank working capital, as the other speakers have talked about, because our customers because they need it. I mean, Houston is the largest exporting city in the United States, and as Bill mentioned, Texas is the largest exporting state. It exports at twice the rate of the average state, and we've got a large international port, and we're the energy capital of the world. And when you're a bank, your primary role is to support the borrowing needs of the customers that you serve. And when you're in an international market, you have to figure out a way to support companies that do business internationally. And, the EXIM working capital provides us an excellent way for us to share in the risk with EXIM Bank, not eliminate all of the risk in the transaction, but share in the risks that are more difficult for a commercial bank to accept. But basically, when I talk about sharing, we use the EXIM Bank Working Capital Guarantee Program for our borrowers, but rarely is that the only thing that we'll do for a borrower. It typically would represent about half of the money that we lend to a borrower. So we have had a great track record, and in 20 years of using that program for our customers have never had a loss on a working capital loan. Overwhelmingly, our customer base is small business. Over 70% of the customers we serve are classified as small business by the Small Business Administration. And the remainder would look fairly small if you walked around on their shop floor. These are manufacturers. These are service companies. An example of a customer that we help would be, I have a customer that exports equipment related to the oil field industry. 100% of what they sell goes to Algeria. And they need to borrow money from the bank to support their normal working capital needs, as well as letters of credit that are required. And so we provide that with an EXIM guarantee, but also they use insurance through EXIM Bank to insure the foreign receivables. And that is, a further example of the type of risk sharing that happens. When you talk about buying insurance, you pay a premium and you share in the risk with the insurance company, no different than when you pay premium for a homeowner's insurance policy. So that's the way our customers, use that. In that example, in that case, that's 100% exporting companies. So all of the employees of that company benefit from that. And collectively, we support hundreds of export-related jobs through our the lending that we do. And the other thing I think is important in Texas, we are there's some cyclical industries like the energy business. And if you look back at the last financial crisis, the support, the need to rely on EXIM Bank financing, went up when credit got tighter. It was harder to make certain types of credit accommodations. Lenders weren't as able to get out there and do that, and so the use of the guarantee was helpful to continue to help credit flow at that time. And you could say with oil prices down as well, it's a similar need at the time to use that. So that's some background that I could offer, and look forward to the questions as well.
Okay, let's start the question and answer session if we can.
Thank you. We will now begin the question and answer session. If you have a question, please press star then 1 on your touch-tone phone. If you wish to be removed from the queue, please press the pound sign or the hash key. There will be a delay before the first question is announced. If you are using a speakerphone, you may need to pick up the handset first before pressing the numbers. Standing by for questions. And once again, that's star then 1 on your touch-tone phone. And our first question comes from Michael Lindenberger. Please go ahead.
Good morning. This is Michael Lindenberger, a Washington correspondent with the Dallas Morning News. Thank you for doing this. I guess my two questions are for the Texas folks, if possible. I guess the biggest argument against the bank's continuation has been that the vast majority of exports don't rely on this kind of help. And so these critical sort of needs that you lay out aren't stopping the other 98% of the exports. So I'm wondering if you can address that. And I guess that's the main thing I'd like to hear from you then.
Well, this is TJ Raguso at Amity Bank. I can say that if you're one of those 2%, and that 2% of U.S. exports is a very large number, and so when you talk about how this type of financing improves the competitiveness for that, that group of companies and the employees that work there, it feels pretty important when you're in that number, and there's a lot of opportunity to take that further into the exporting community as well. But again, the companies that would come to us and say, "Can you finance this for me?" Well, this is the way that we do it, using these programs.
I mean, I guess just to follow up on that, if you would, I mean, do you have other companies that do exports that don't rely on this? I mean, those other 98%, do they just not use your bank, or?
Well, it's probably a mix. I mean, some of them might be, a very large company. Every company has a different capital structure. Some have access to funding sources that others do not. But if you're walking into your commercial bank and you're presenting a package of collateral for a loan, and it involves internationally focused collateral, well, I'm just sitting in my commercial banking chair, here in Houston, Texas, and that's a type of risk that I've got to find a way to mitigate in a lending transaction. So this is a solution that allows me to make the loan that my customers ask for. So I can't really speak to all the others, but I mean, there's so many different circumstances that are out there.
Thank you very much.
This is Bill Prout with Bank of Texas. If I could add to that, the fact is yes, a lot of the larger companies may be able to export without XM. I think it's really the small and middle market companies that really critically depend on this. But there's also a number of jobs and exports that don't get captured in these calculations as with the large projects and things. There are exports that happen all the time here in Texas related to large infrastructure projects, large oil and gas projects. A big company won that contract. However, there's numerous small exporters that are suppliers and sub-suppliers, and those goods are going overseas as well.
Thank you.
Thank you. And our next question comes from Nick Tamaros. Please go ahead.
Yeah, thanks. Nick Tamaros of the Wall Street Journal. I was curious if Tim or Bill or TJ could speak to what the practical impact, if any, would be on if a reauthorization came sometime this summer after June 30th. So if we're living for the month of July, for example, without XM, would there be any kind of immediate impact to either the businesses to which you've made working capital guarantees, or would a 3 or 4 week lapse and then a reauthorization after that be something that, while uncomfortable, wouldn't have much of a disruption?
Actually, this is Bill Prout with Bank of Texas. It would have an immediate impact. I can think of a customer that has a June 30 renewal, and if XM Bank was not reauthorized, we'd be in a situation where we could not renew that facility, and we'd find ourselves in a workout type of scenario. It's just really no way around that, because that international exposure on those foreign receivables is something that we would not be able to underwrite directly.
This is Tim McCarthy. I also want to mention XM Bank has a requirement that the commercial lenders demonstrate what they refer to as additionality. In other words, Ex-Im Bank is required, their support is required in order for a commercial bank to extend a line of credit. If, in fact, as Bill mentioned, there is a renewal that comes during a period when the reauthorization has not been approved, the bank is going to be in a position where it will have to potentially demand payment on that credit line, the outstandings. Most of the companies that we deal with aren't liquid enough to immediately pay that off. It would then go to workout and potentially a claim on the guarantee. So the longer that reauthorization is delayed, the greater peril that the exporter has in a renewal coming due, and the greater chance a claim will be made on the Ex-Im Bank guarantee.
The other immediate impact here is at these small businesses, whether or not that they can count on Ex-Im Bank going forward, and that's how they plan their sales. That's how they plan their capital investments. That's how they plan whether or not they can take that job overseas. And this comes back to a point made earlier about being able to have this kind of financing available in a cycle like this, particularly here in the Texas market, because of the cyclical nature of the energy, oil and gas business. Right now we're in a down cycle at home. This provides market diversification for these customers, and I've seen many times we've had customers that have thrived and done well, or at least survived because of the business they were able to do overseas that was directly supported by Ex-Im Bank. So it is really important right now as far as the customers being able to count on Ex-Im and take those overseas jobs.
Sorry, and who is this? Was that just now? Was that Bill?
That's Bill Prout.
Okay, thanks.
Thank you. And our next question comes from Krista Hughes. Please go ahead.
Thanks very much. Just wanted to, I'm sorry, I'm not quite sure which one it was, mentioned that the Ex-Im was particularly needed because the cost of credit has increased and the crisis is harder to make loans. Can you give us an example of how much the cost of credit is now compared to pre-crisis and compared to the peak?
Hey, Krista, this is Jared. We couldn't hear your question. Would you mind just repeating it a little bit?
Can you hear me now?
Yes.
Can you hear me now? Okay. One of the gentlemen had mentioned that the Ex-Im was particularly needed now because the cost of credit had increased with the crisis and it had been harder to make loans. I was just wondering if could someone give an example of the cost of credit now compared to pre-crisis and compared to the peak, if it's come down at all? Thanks.
Gotcha. So the question is, can they talk to the cost of credit now versus pre-crisis?
And compared to the peak, yes. Thank you.
Okay. Did everyone understand that question? I know it was a little hard to hear.
I'm not sure that anyone made that point. I think it was more talking about the need through the cycle as far as supporting foreign sales during this down cycle here at home in Texas.
This is Tim McCarthy with TD Bank. We did a quick look at Ex-Im Bank's authorizations during the financial crisis and compared them to the contraction of bank lending overall and the growth of unemployment. It was an interesting study in that Ex-Im Bank ramped up its authorizations in counterpoint to a contraction of bank lending. In other words, it stepped in as needed in order to support exporters when credit availability was falling.
Thank you. And once again, if you have a question, please press star then 1 on your touch-tone phone. Standing by for questions. Kent, your line is now open.
Yeah, I'm going to apologize because I missed some of the call because of technical issues, but I guess I'm going back to what I presume maybe was the first question about that a lot of deals, including a lot of deals for small and medium-sized businesses that are exporters, since most exporters are small businesses, that they are able to get financing without XM. I know one of the bankers said, well, you can't speak for other folks, but that XM guarantee is very important for you to take on the risk of the deal. But how are these other small and medium-sized exporters getting financing? Somebody's providing it, and wouldn't the people that are providing it step up if XM wasn't there? Hello.
Yep. I think one way to look at it is, this is TJ Ragusa with Amity Bank. As Bill Prout was mentioning, so many of our, if you look at U.S. exports, many sectors of U.S. exports are dominated by large players that may ultimately be an exporter of record, but there's a huge supply chain that feeds into all of those projects, and many times us as commercial lenders, we are the bank to that indirect exporter whose exports don't directly show up as the U.S. export. They are just aggregated into a larger export. So I think that's one of the things that can play into that.
This is Bill Prout with Bank of Texas. I could add to that as well. As far as some businesses, and particularly some small businesses, they may have limited credit facilities that are supported by other means. And quite frankly, as we talked about earlier in the call, we all use XM selectively. As I mentioned, XM's never the easiest option. It's never the quickest, and it's always more expensive. So if we can cover those exports in other manner, we do. However, there is a sizable portion of exports that are impacted by XM Bank, and some of that, as TJ was saying, isn't necessarily picked up. So if that helps answer your question, I think when the export volume grows with these companies, that's where XM becomes a real need. When it's just a fraction of what they're doing, it may not have the same requirement. But capacity in the private sector, it's just not there. If you take XM Bank away, the commercial banking sector is unable to finance most of those sales. And it's not just taking away this working capital guarantee program, which is very important to us, but another mitigating risk mitigant is credit insurance, which will sometimes lend against insured receivables. You take those items away, you take most of us out of the game. Our regulators would feel the same way. On the secondary financial type lenders, if you talk about factoring companies, purchase order financing, specialty lenders, well, one thing you'll see is, they don't have the capacity that the commercial banking sector does, and then second, the cost is tremendous compared to what can be offered through the commercial banking sector.
Okay, all right. Well, thank you everybody for taking the time to join this call today. For any of the reporters on the phone, if you have any further questions, and I know that there was some trouble with some folks' lines, so if you have any questions, we'll likely have a recording that I can pass around. Everyone should have my email address, but if not, it's J, F as in Frank, A, V as in Victor, OLE @hamiltonps.com. And I just want to say thank you again to Georgette, Sierra, Tim McCarthy, Bill Prout, and TJ Ragusa. Thank you all for jumping on the call today.
Thank you.
Thanks, Darren.
Thank you.
Thank you. And thank you, ladies and gentlemen. This concludes today's conference. Thank you for participating. You may now disconnect.